Westpac raises interest rates once again. Let's have a look. Hello everyone, Florian.Heise here. Welcome to another episode of HeiseSays. Grab your stein of coffee. I'd like to have a look at this article from Yahoo discussing, Westpac is hiking its rates once again for the third time. Again, we're having another bank hike their rates, even while the cash rate is sitting at 0.1. So obviously they're preparing for costs to go up in the future. So Australia's second largest bank, Westpac, has hiked its fixed rates for the third time in a month. Today's hike affects both owner-occupier and investor rates across the Westpac Group, St. George, Bank of Melbourne and Bank SA. Now, notice how you've got Westpac, St. George, Bank of Melbourne and Bank SA. And just going off topic a bit here, where you have the $250,000 deposit guarantee, that's for all of the whole Westpac. So if you've got or if you've got $250,000 in Westpac, $250,000 in Bank of Melbourne, and $250,000 in Bank SA, and they all go under, you're only guaranteed for $250,000 in one of those banks, not all of them. So just remember that when you're splitting up your personal banking and your business banking, you don't want to have it all in one bank and one conglomerate, really. Anyway, like the Commonwealth Bank and ANZ, Westpac now has no advertised fixed home loan under 2%. Only NAB has one fixed rate starting with a 1. So I suspect all of us who have fixed in our rates below 2%, I didn't think it would go any lower. I honestly didn't think any of the talk of negative interest rates would materialize here in Australia. So that's why I quickly fixed in. We can see here from 1.99, the biggest increase is the 3-year fixed, 2.29 to 2.59, up 0.3 at $78 a month. That's on a $500,000 loan. Now, if we have a look here, a $580,000 loan, which is the average mortgage here in Australia, guys, you're talking an extra $90 a month. So that's 4% increase on your costs, $2,318. So $100 a month, rounding, that's your internet bill right there. That's a subscription and some 4 mobile phones to the families. That's a decent amount of food and not quite a tank of petrol anymore. It will make an impact to some people, but we're still not, it's not a drastic change. It's $100 extra a month. That shouldn't be enough to pull people over the edge. The impact of this is going to be on borrowing capacity, and then that's going to cool the housing market and how much people can bid and fight for to get into housing. That's what we're going to see. Rates have increased for both owner-occupier and investors, with monthly repayments for a $500K loan increasing between $27 and $78. On the 19th of October, Westpac hiked its 2- and 5-year rates by 0.1%, and then hiked its 3- and 5-year rates by between 0.1 and 0.21% on the 4th of November. So the rate rise wars. Analysis of the ratecity.com.au database shows banks are moving swiftly to hike fixed rates. In the past month, 16 lenders have hiked fixed rates twice, including CAB, NAB, and ANZ, while Westpac is the first bank to hike fixed rates 3 times. The banks have hit the accelerator on fixed rate hikes. They're coming in thick and fast, and they're typically getting bigger with each hike, ratecity.com.au research director Sally Tyndall said. At first, the fixed rate hikes were isolated to long-term rates, but now banks are lifting across the board at an extraordinary pace. Tyndall said fixed rate hikes were more than speculation that the cash rate would rise earlier than expected. The cost of wholesale funding is increasing, and the banks have decided it's not sustainable to keep fixed rates at ultra-low levels, she said. Customers waiting in the queue for their fixed loans to settle will be rightly frustrated at these rapid rate rises, unless they're locked in their rate. So here's the thing, everyone. They're looking at, one of the little plugs here from Rate City again and again is just to encourage people to lock in their rates. So, let's have a talk about all of this, guys. Once again, we have another bank raising rates, everyone. It's going to be an additional cost. And as I said, I don't think we're going to see people go to the wall. not over $100 a month. These rates are so low. They're insanely low. There may be some people on on a $800,000 mortgage, but their income is going to be at a higher level that they should be able to absorb this cost. If anything, what you might see are people are going to reduce their discretionary spending. The smashed AV on the weekend is going to become less frequent. Worst case, they may pull the kids out of private school and find other ways to save money. For the owner-occupiers, they'll do everything they can to keep in their house, and there'll be a lot of that they can cut to make it happen. The biggest risks are those that are at a government incentive to push them into the market. Those that have used Home Builder and maybe pushed a bit further. Those that have used a 5% or a 2% deposit guarantee to get in. But then you've got to remember the issue is building up that deposit to jump into the market. That's often harder than maintaining your repayments. We're going to see all these article after article about people at potential mortgage stress. But what if the mortgage stress? What if the 30% of your disposable income that's going on your housing, what if that is still less than what you had to suffer to get a deposit? We're in a different time now, everyone. How many people have taken years and really sacrificed significantly to get into a house? And now, well, they may be in an easier situation. So that's why I'm not jumping on the bandwagon. It's all collapsing, it's all going to go crashing down. I'm just too cynical about that now. We've seen too much of that come out in the media last year. I suspect a lot of that was done for political purposes to give our politicians on the conservative side justification to just ramp up insane debts with Home Builder and other incentives. I think it's done for political reasons. Maybe I'm getting too old, maybe I'm getting too cynical. What do you reckon? And hey, guys, don't worry. There's always those 2 million additional migrants coming to Australia that's going to have an impact on housing here in Australia. And I want to segue to that video if you haven't seen it. The call for 2 million additional migrants is going to have an impact here. Check it out, guys. Take care, and I will see you all in the next video. Bye for now. Enjoy your Stein.